Changes by the ACCC back in 2020 have meant that for the past 5 years, you've been able to give permission to third parties to access some of your banking data. Now, don't be scared. It's not another scam story. It's called open banking, and that might be the key to help you get more accurate pictures of your finances. As a consumer, you have control over your data, but under the new rules, you can share out things like your balance, product info, rates and fees, transactions, details, etc., etc., etc. And they're on the things that you spend on. The idea behind it is that it's a better assessment of your financial situation, and therefore you can take away the guesswork of what your expenditure is, what your income, etc. is when you're applying for things like loans. Launching a new app to help through the process is Clint Howen, the founder and director of WealthX. Clint, welcome to Money News.
Oh, g'day, Evan. How you doing?
Very well. So I've been given a brief overview of open banking, but it seems even though the rules have been in place for half a decade, most people don't know about it.
Yeah, I think that's a bit of a case of bad advertising. When you actually look at how much money's been spent on this, you know, you're talking billions of dollars by the banks setting up the infrastructure for this, and you know, it's been at the heart of it. It's a good initiative. That was actually, I believe it was ScoMo when he was back as the Treasurer still, actually initiated this whole open banking framework. So yeah, like you mentioned before, it's overlooked by ACCC, and it's it's designed to be really the heart of it, trying to make it more competitive for the banks and making it easier to switch from one home loan to another. And there's been some really good use cases overseas that have actually got similar frameworks, like the UK or in the States. It's really big as well.
Can I be a bit cynical then on that? Like you said, they obviously spent $1 billion on bad marketing. As you said, it's about making it easier for switching accounts. Banks don't want you to do that. Is that part of the reason, do you think, that they have been bad at marketing this to the general population?
Yeah, well, the government, the advertising actually needs to come from the government, not the banks, because the banks, especially the major banks, push back on this quite heavily. There's something that they've had to get dragged along to do because they don't want it to be easier for you to switch providers. So they've kind of been against it. But from a consumer point of view and from a government initiative point of view, it's designed to get better consumer outcomes.
So at a time where scam activity has been elevated, how does open banking actually work to securely share consumer data across the institutions?
Yeah, so open banking's actually the safest way to share your information. It's eliminating, or the goal is to eliminate screen scraping, which actually a lot of budgeting apps use now, which is you're actually typing in your login details and it goes and scrapes all the information from your bank. But the whole framework and architecture has been set up to be extremely secure. And if you go through the steps, you normally have to go through, say, if you want to connect with an app using open banking, put in not something that's critical to your banking information. Normally it's something like your phone number. That then triggers something in your mobile app or will send a separate SMS code. So it's designed to be the most secure way you can, share your data. And the other thing too, it's read only. So at the end, heaven forbid, if someone does hack into the system, they can't actually do anything with the information. They might be able to read what you've got in your balance, but that's as far as it goes. So they'll never be able to break in or hack into your banking system and transfer money out or anything like that.
So normally when we go to apply for financial products, loans, credit cards, etc., we have to report our current habits. Are we entering false information on purpose, or are we now just, looking at the errors on easiest way to fix with open banking?
When it comes to people putting in, say, their expenses when they're doing a loan application, it's not that people lie or it's people are doing it on purpose. It's just that people have no idea really where they spend their money. And the idea, even as simple as what's your current interest rate, how much of the balance you have outstanding, what are your repayments? These sort of basic information, a lot of people just don't have at hand, or even on the banking sites, it makes it really hard to find that information. So with open banking, and you're basically just getting a true reflection of what's actually happening. So you can, as a consumer or user, I use the app myself. I can actually see where I'm really spending my money, and I don't have some made-up imaginary figure of how much I spend per month. And I actually know what is my current interest rate, what's my loan balance at, how long am I expected to pay off this debt. So it's just getting like an actual picture, not assumptions. It's the best thing it helps with.
Are you able, therefore, to use the app to not just work with problems and fix them, but use it to actually relay to the banks on application exactly your current layout? Is that how it's going to work?
Yeah, it gets rid of, in things that are incorrect, or just inconsistencies or back and forth. Like, say, if you're talking to a broker directly and you go, "Oh, here's my information," then they might review your bank statements and go, "Oh, actually, this doesn't add up." So it's eradicating that back and forth that you get. And yeah, you can use all this data to apply for loans. The banks are spending. There's actually a bit of an arms race at the moment. If you're not in the industry, you wouldn't hear about it, but they're spending billions of dollars, all competing to each other to try to do this automated approvals. How do I get you approved, Evan, within a minute or 5 minutes? And they're building those systems based on things like open banking and using actual data that they can trust to then be able to spit out, approvals as fast as possible, which when it comes to potentially switching home loans in the future, it could be as easy as clicking a few buttons. That's kind of where the future's going with this stuff.
So does that mean, therefore, because it is getting more accurate data, it translates into stronger loan applications and therefore better rates as well?
Yeah, exactly. I think the biggest thing, if you're doing a loan application, especially for first home buyers, this is the biggest shock for them, is having an understanding of where you're actually spending your money as well. But it's just moving into that future state where the easier you can make it for people to switch, the more likely they're going to switch, and you don't switch unless you're getting a better rate. And that's the biggest barrier for people, to be honest. It's not just switching for a better rate. It's just a really painful process. So, I'm not sure if you've done a home loan recently, but it can be quite a painful process. So if we can make something, and in that future state where the easier it gets, the more likely people are going to switch, and therefore there's going to be a lot more competition. And that's kind of the philosophy which drove this whole framework, many years ago.
Clint Howen, thank you so much for joining Money News.
Awesome. Thanks, Evan.
That's Clint Howen, WealthX founder and director.